I want to welcome you to Global FX Radio's webinar series on the foreign exchange market. Today's webinar, we're going to be discussing how to calculate and the importance of the Euro, Great British Pound, or Sterling cross. In my 7 years of doing foreign exchange trading, one of the most important things I've learned is the importance of knowing which currency pair, but really more or less what currency is the relative exchange winner or loser, and going with that trade, letting your winners ride and cutting your losers. Well, the Euro Sterling cross enables one, in my opinion, of course, to determine relative strength and trade accordingly. One of the most important things to understand about the crosses, when I talk about the crosses, they're what we call the majors in foreign exchange. That's the Euro, US dollar, dollar denominated. Euro, US dollar, dollar against the yen, pound dollar, dollar Swiss. Those are the four majors, they're called. Euro against the pound is what we call a cross rate. That is what the euro is trading. And if you go to London and you give them euros, how many pounds you will get back, or vice versa. And that exchange rate is just a formula. So important to understand that it's just a formula. And in foreign exchange, if those formulas get out of whack, well, adjustments must occur in the price of an exchange rate of another pair. It's basic algebra. So, getting right to it, how do we determine the value of the euro against the pound? Well, we take the exchange rate, and as you see on the screen right now, we take the exchange rate of the euro dollar in your top left corner of 1.4714, and we divide it by the exchange rate of the pound. And right now it's trading at 1.8595. Look at that. Bottom left corner. Euro sterling cross rate is 79.12, 79.13. Now there's the bid-ask spread, and obviously there are different ways to play that, and there are scalpers that trade off that spread or the exchange rate. But the bottom line is this. It's all just a formula. Other days when someone might be selling euro sterling cross, and that influences the euro dollar and influences the pound dollar, of course. As we see here, there was a relentless selling today, Tuesday, September 23rd, 2008. And we see here that euro sterling began to sell off. Really, the momentum started just about 9:30, and we saw the euro begin to grind lower and actually sold off 150 pips until the bottom at 340 when euro sterling stopped. Now, but we see here that sterling dollar was holding up relatively well this entire time, from 9:30 a.m. Eastern until 12:30. Take a look. It wasn't until euro sterling had that bounce at 12:30 of only 12 pips for sterling dollar to melt down 80 pips. The pressure off the euro abated. Euro sterling, the pressure abated. Euro dollar proceeded to go down from the 9 o'clock price, right, we had, by 1 o'clock, over 120 pips. Whereas cable really didn't go down so much. Because the formula, as euro sterling was going down, euro dollar was the relative strength loser. And the same applies in the opposite direction. So it's very important, and this worked last week also. We saw last week. We see here, when euro sterling goes higher, is going higher, one of two things must happen. If euro sterling is breaking higher like it was, one of two things must happen. If it's going higher, it's a mathematical certainty that if cable dollar is not doing anything, if it's just futzing around 10, 15 pips, and euro sterling goes up by 100, euro dollar must go up. There's no ifs, ands, or buts about it. It must go up. And it's not easy. I'm not saying to you it's the holy grail and it's something that all you got to do is just watch euro sterling and you'll be the best currency trader in the world. No way. It's one quiver in your armor. It's one quiver in your basket. It's a bullet. It's a reason to make a trade. You have an opinion on euro sterling. You think euro sterling is going down. Well, you want to look to be long cable. Maybe sterling yen. You want to look to be short the euro because the euro is going to be the relative strength loser. As we're looking at the market right now, you're seeing what's going on here. Take a look. Great example. Euro dollar just sold off 5 pips. If you're watching the ticker, if you're watching the charts of both, euro sterling just popped 5 pips, and cable just came in almost 20. Euro dollar came in 5. So it's so important to have a general feel for the euro sterling because that will be shifts in relative strength. There'll be times when euro sterling is breaking out, and the euro is the relative strength winner, and then the euro is the place to be, and then if that lulls, then you want to shift into cable. A lot of traders make a big mistake and think that just because euro dollar is going up, sterling dollar should go up. Not if euro sterling is going up. If euro sterling is going up, euro dollar, if the dollar is weak, is going to outperform. And once that pressure stops and it starts going down or it stops going up, then cable is free to go up. Sterling dollar, pound dollar. It's one of the most important crosses to watch, again, relative strength. How many times have you, as a trader, seen sterling dollar drop by 30 pips and you're like, what the hell's going on? Euro's going nowhere. Euro sterling is rallying. If we just take, let's just take, for example, let's say the euro dollar was trading 100 pips higher, and cable was trading nowhere. Okay, let's just do this, just to give you an example, an idea. So, clear. We take 148.10, 48.10, and we divide it by 185.77. And we see 79.72, and euro sterling is trading at 79.15. So it's a mathematical certainty that if euro dollar is higher and cable is nowhere, euro sterling must be higher. And it's so important to trade and understand that. And a lot of times, if you notice, for example, that euro sterling is ticking up, but euro dollar is not going up anymore, and you had bought cable on a sympathy trade and euro sterling keeps going, you're going to get destroyed in that long cable trade. Cable is going to come in hard because the euro dollar is not going up, euro sterling continuing to go up, sterling dollar gets hit. So for relative strength, it is one of the most important crosses when you're trading the euro dollar, when you're trading euro yen, when you're trading sterling yen. Look at sterling yen today. Sterling yen did not even break today. All right, take a look at that sterling yen. It did not even break today. It broke, but basically held up well, 196. Whereas euro yen is down almost 110 pips. That's because euro sterling broke 70 pips, and the euro was the relative strength loser. Cable is hanging in tough. Okay? Very important to understand that. And if you have an opinion on that euro sterling, trade accordingly. You're probably going to be right. If you are right and you make the right decision, you'll be a much better Forex trader. And again, hopefully this enlightens some of you to understanding that a lot of these crosses, it's just a formula. It's not necessarily that they're buying them all or selling them all. A big move in a cross rate will have a dramatic impact. It's the same with euro Swiss. That's another big cross if you're trading the Swiss franc. Same philosophy. Andrew Spanton, Global FX Radio, webinar series. Thanks for listening.